How's it going, everybody? We have an incredibly busy week this week and a really important one as well. We have CPI coming out tomorrow, Tuesday, and PPI numbers on Friday. But what I want to focus on right now is the CPI report happening tomorrow, because depending on what happens in this report, this could affect the way that the dollar and gold trade for the foreseeable future. So let's get into that. Right now, we're sitting at 3.4% inflation. This is our most recent CPI report. This is the report that came out in January for December's inflation, right? So in fact, if we actually look at CPI inflation, CPI year over year, this little tab right here, we can see obviously we don't have our January number yet because we're in February. So we're going to get last month's report. Once it's all said and finished, what happened in January. So that report is coming out tomorrow, and that will get updated then. But what we can see in December is US dollar, we see 3.38% inflation. So we're rounding that up to 3.4 here. But yeah, our previous inflation report, CPI report, was 3.4%. Now we know that the Fed's long-term goal for inflation is 2%. And look at this, you guys. Tomorrow, the expected CPI result, it's expected to drop to 2.9%, which would be absolutely huge. That would be very, very close to the Fed's long-term 2% goal of inflation, and another huge step closer to rate cuts. Now, interest rates are going to have a huge impact on the way that the dollar trades.
The two biggest things that I'll be looking out for this week, by the way, are the consumer price index and the producer price index. I have videos on these topics that will be dropping this week, which is exciting. We'll be taking a look at some of those topics in depth, how to read them and how to use them in your trading. But today, what you need to understand is that hot inflation tomorrow will lead to a stronger dollar because interest rates will be expected to stay higher for longer. If, however, we get inflation numbers that are cool, the dollar's likely to weaken. And so what I just painted is a very binary story tomorrow. And anytime you get big binary stories like that, that's usually where you see a lot of volatility in the markets. So for example, if you see gold here tomorrow just absolutely tank through the lows, it is likely because the inflationary number that shows up is hotter than expected. And if you see gold have a huge bounce tomorrow, it's probably the inverse. Inflation is probably cooling meaningfully, and the Fed could look to rate cut. Let's set up some if-thens.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that TraderNick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
If CPI is hot, right? If CPI is strong, then gold, we look for possible setups where, again, breakouts, retests, trade with the momentum of that catalyst. That's my personal approach. That's my personal opinion. That's how I'll be watching gold. Could there be some short setups this week on gold? I think there could be if you get hot inflation. We don't know what this number is going to be. What a lot of traders will come into these sort of streams and say is, well, Nick, what is the CPI number going to be? And if I was some sort of genius quant, inflationary computer engineer that could predict those numbers perfectly, then I would get paid a tremendous amount of money by like Goldman Sachs or something. But I don't have that. And I'm not a supercomputer. Instead, I am a trader. So I react to these numbers, right? So instead, what we do is we watch to see what that number comes out to be. And if it presents setups where we can get good risk to reward, that's all I can ask for as a trader, right? I'm not looking to predict what CPI is going to be. I'm looking to react to what it actually comes out to be. Sure, I'm not going to be able to trade the, millisecond chart and beat the algorithms on Wall Street. That is ridiculous to think you would. Instead, I'll look to trade the momentum, the catalyst, the story that could unfold to follow. So that's what I'll be looking at if CPI is hot. If CPI is cool, right, then perhaps it's time to look for more bullish setups on gold. At the very least, I think if you're a bull on gold and you get cooling CPI data tomorrow, a reasonable short-term target would be at the very least to look for a move back up to the tops here of this range. If not that, to be honest, I think that if you get really cool inflationary numbers, gold could meaningfully move beyond this level of resistance and even retest these previous highs around 2080.
So people were expecting rate cuts in March. That was kind of the overall market consensus, is that the Fed was going to cut rates in March. That's what people were predicting. Jerome Powell essentially stepped in and said, yeah, I don't think that's going to happen. With a report like this, we are closer to that possibility, but he still may be patient and just wait until later on down the road. However, a report that comes in cool like this, a nice cool inflation report, is a huge step in the right direction for cutting interest rates. Interest rates being high keeps the dollar strong. So with interest rates getting cut, that is going to weaken the dollar. Inversely, that would be a really good thing for gold. Now, the opposite is also true. If the CPI report comes out unchanged or higher than expected, then the Fed wants nothing to do with cutting interest rates, and that is going to keep the dollar strong. And recently, gold has been bearish. If that were to happen tomorrow, that would be a huge hit for gold. That would be a big bearish move, I would imagine. So that's what's happening in the inflation world, and that's why this report tomorrow is so important. If numbers come out cooler than expected, or at 2.9, anywhere in the 2%, lower than what it has been, that's going to be a good thing for gold, bad thing for the dollar, most likely, because interest rate cuts are coming at some point. If inflation doesn't move at all, or in fact ticks higher, interest rates, don't even think about them. They're not coming anytime soon. Inflation has to come down before that can happen. That'll keep the dollar strong. That'll keep gold, at least right now, gold has been fairly bearish. Let's check out a few more of these fundamental tabs while we're at it. Take a look at our NFP data. This is a pretty cool one because we can actually see the posted report, as well as the revisions that get made or that happen later on, as well as the forecast too. So we have this little chart right here that goes up to 600, 0 to 600 right here. We can take a look at this. So in February, the actual non-farm payroll amount that came out was 335. We can see that the forecast was only 187, so we blew that forecast out of the water, and we haven't gotten our revision yet because we are still in the month of February. But if we look back at January, we can see that the actual posted report was 216, which again still beat the forecast of 170, but the revisions were way higher up here, all the way at 333. So recently jobs data has looked pretty good. Unemployment claims, we can see that they were trending down for a little while. A few weeks ago in January, they have ticked up a little bit in February. JOLTS job openings, same thing here. December and January, both in the 8,000s, but we actually jumped up a little bit here with our most recent JOLTS report. So jobs numbers looking good. Unemployment rate hasn't moved, but it actually has ticked lower since the end of the year. Last year, it's ticked a little bit lower. We can also look at wage growth, things like that. We can see that wage growth has been increasing in the U.S. Over the last 3 months especially. And then economic growth. We have retail sales here. I believe that we actually have retail sales coming out this week as well. Yes, we do. So on Thursday, we're going to get new retail sales numbers. Previous report, 0.6%. Our expected, not very good, negative 0.2%. Let's check out our retail sales right here. Retail sales have been growing over the last 3 months, but Again, that most recent report is expected to not be so good. It's expected to be negative. So we'll see if that happens on Thursday. But yeah, we have a really busy week this week. Again, the economic calendar is super useful for helping you keep up with all these big market moving things. And again, CPI tomorrow is going to be huge. You're definitely going to want to check it out. We will be live for CPI. So if you want to watch that, head on over to the A1 Trading YouTube channel at 8:30 a.m. Eastern tomorrow, and we will be live reacting to that report with all you guys watching with us. So hope you guys enjoyed the video. If you want the Edge Finder for yourself, you can find it on our website. You can also find it in the descriptions down below, and you can get a discount on the product when you use promo code A1YT at checkout. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.